I think the difference that we need to hone in on too, Michael, is how different the job market is today versus 2022. I think one of the best rules of thumb for the economy is if people aren't spending money, then this thing doesn't work, right? Then, growth suddenly stops. Consumer spending is 70% of the economy, and consumers spend money when they're making money. It doesn't get that simple, but in some ways it does. We saw that in 2022 front and center because everybody was worried about inflation, but the job market was red hot. I mean, 380K jobs added per month. That's the third best year for hiring in a century. And you have stats like that for miles with the job market. Employees had the upper hand in these negotiations and wages and flexibility, the amount of jobs they held. It was the year of the employee. And even though prices were high, a lot of us were still making money. We were like, okay, the vibes suck, but I'm still booking that trip to Paris. Of course I am. That's not what's going on right now. Hiring is below average. Unemployment is rising. We're seeing layoffs come in both in the public and private sector. That's what makes me worried, Michael, because that present situation line, that blue line that was in the chart that I showed a few minutes ago, that could start coming down if we see enough job cuts.
I do think that the hard data will catch down, maybe not all the way, but I think the hard data this time, unlike 2022, will likely show up at some point.
Yeah, I agree. And I think I need to see the burden of proof. I need to see it happen because this economy is so resilient and I don't want it to happen. But in 22, you looked at the job market and you said, there's a lot of cushion here. There's a lot of obvious cushion here if you believe consumer spending is the base that we're building up from. But that cushion is a lot thinner.
Before we leave this topic, I just want to share a chart that I saw Mike Siccardi tweet. This is an absolute chef's kiss for people that are listening. We're looking at, this is from Goldman Sachs. They say it's not unusual for hard data to lag in an event-driven downturn. So yeah, the feelings turn first because people can sniff out the fact that things are deteriorating. So that's the chart on the left. You see the soft data in red rolling over well in advance of the hard data showing up. Okay, that makes sense. We know that. The current episode, though, the disconnect, it is severe. Like the data has peaked. I don't know if it's rolling. Maybe if you squint, it's rolling. But my goodness, look at the expectations. This is remarkable.